Hey everyone, this is Kirk here again at Option Alpha, another video update for you guys. So it's getting into the second week of the October trading, I guess, and the third quarter of trading, fourth quarter of trading. And it's been pretty impressive. The last 5 days, the S&P's been up nearly 8%. The Russell has been up about 13%. So pretty impressive turnaround from where we were really in the beginning of October, end of September, which really ended on a bad note for the market. So here's the chart of the S&P, and I actually just broke it out away from all the other charts and the platform for Thinkorswim just to highlight a couple things. One, you can see that we've had this type of choppy trading for the last 2.5 months now, and namely a couple times back in August where the market has seen really good rallies off of lows, and then we get crushed right back down. So I would be far-fetched to say that I think that this is the beginning of something really, really substantial. I think that it surely can continue throughout October at a steady, slow pace higher. I'm not sure that we're going to get crushed right back down into the below 1100 on the S&P, but I think that we could definitely stay here and remain choppy, but trade slightly higher through the rest of October. Now that really just sticks with the same analogy that we've all been kind of using for the 2007-2008 market top, which we'll look at here in a second. The thing is, right now with the market we're in, there's a major resistance level at 1225. So really breaking above 1225 and 1250 on the S&P is going to be very hard. I'd be far-fetched to see it do it in this one move higher. So just from today and continue higher. I think we're going to have a lot of choppiness through that level, and I think it's going to take a lot of volume to get it up past that level. Now, yesterday's volume on the market, even though it rallied, was pretty lackluster. It wasn't as great as we'd like it to be on a big up day like that, but that's what it is. The thing with the moving average, the 50-day moving average, just sometimes kills me almost, because people are they think it's like an act of God that it moves above the 50-day moving average, and that all of a sudden is this buy signal that you're going to go off of for the next 5 months, 5 years, whatever. It's just an average. It's just a data point. With all technicals, you have to take it with a grain of salt, of course. Same thing with these Fibonacci's that were pretty good for most of the month, and then you can see they faltered a little bit, so there's a little bit of, it still acted as a resistance level at 1125, but, dipped down below there for 2 days almost. Same thing with these moving averages. It's something to take note of, obviously, but it's an average. It's just a data point on the chart, and it's a very slow indicator at that. So you can see that the moving average is clearly pointing lower, and the 200-day moving average has started turning lower as well. I would think that those are more important than the fact that it actually closed above it as a big buy signal for the market. If you actually look at where the market breadth indicators are, and market breadth being everything is being bought up lately, you can see that what we had the last couple months or last couple weeks here, we had market breadth that was absolutely low, just very, very low. A lot of low numbers, 0, 10, 5% of market breadth. So a lot of stocks trading to the downside, being very, very oversold. Now we're starting to get back up in that range where we're getting a little bit overbought. And you can see that historically we've had a downtrending market breadth, but every time we've peaked our head up near 70 or so, the market has continued to move lower after that. So those usually signal short-term tops. So we're not quite there yet. There's a little bit of room left to go. Right now it can definitely trade higher, and by the chart that I was just showing you guys, you can see that we do have some gap in between here until we get to 1225, which is going to be major resistance. So there's definitely room for the market to move higher. On our analogy of the 2007-2008 market top, I'll just zoom out so you know where we're at. Right here is where we're at on the S&P, so I'm zooming into this area here on the 2007-2008 chart. And the analogy is really quite astonishing. Here are those same two levels where the market had broken down lower and regained the bottoms back in 2007 and 2008. And you can see that we had the same type of breakout here, a breakout of the 50-day moving average, big white candle, strong move above the 50. Obviously, everyone thought it was a big buy signal. And like I was saying, is that it started to move slightly higher but choppy through the rest of April and May until it finally had our last opportunity to get out, obviously, for those people who were in. before the very, very, very big fall, which ensued after that. So I think we're going to see the same type of thing. I think November, December is going to be fairly choppy, but trading slightly higher until we get into the first half of next year, possibly, and then we start to resume the downtrend from there. So hopefully, as always, these videos are helpful. I always love your guys' comments on thoughts on the technicals and what you guys see and how you perceive the market. Just add them to the comments below, as always. And happy trading.